This week saw the JSE hand sugar producer Tonglet its maximum 7.5 million rand penalty for issuing misleading and false information to investors. Some analysts feel for a company of its size worth 739 million rand as of Thursday, the fine is relatively painless and a small change for the loss of value its former executives inflicted on investors who are ultimately ordinary people who were exposed through their pension funds. So on the other hand, there's been a hive of activity in the market. So to help us track the indicators and the week that was on the market, it's Lavan Gopaul, who is a director at Merchant Africa. Thank you very much for joining us.
Good day, Colin, and thanks for having me on the show.
All right, before we crisscross the bosses throughout the world, I would like us to take insight into punishment of this kind. I don't want to use the word magnitude in as far as slapping on the wrist Tonglet for this rather short positioning, shall one call it, onto the boss.
So let me start off by saying the Tonglet share price has dropped by more than 95% in the last 18 months. Of course, there have been many casualties. Those that are shareholders have been hurt dramatically, and you would have seen the ramifications come through in portfolios from pension funds to private individuals. Certainly, it has had a lot of pain across the board. But many people must also register the job losses have been as a consequence of the actions by directors. And I say that with caution because we'd still like an investigation to confirm what has happened. Of course, other businesses that are stakeholders with Tonglet, including creditors, have also been maimed in the share price movement and the changes in the company. Of course, we'd like the National Prosecuting Authority or some other body to investigate what has happened at Tonglet, and if there is blame, those that are guilty should certainly have action taken against them. Bear in mind, this is a common theme now. We've seen Steinhoff also go through a deep share price dip and accusations laid against directors. There will, of course, be questions that the auditors would need to answer because all of the movements at Tonglet or Steinhoff, for that matter, happened on the watch of the shareholders.
I mean, when you talk about this kind of action with nobody wearing orange overalls or anybody being arrested to that effect, is really not surprising given the country we are in. But other than that, is that really the case that's applicable across the board in as far as white-collar crime is concerned?
So the message that needs to come out is that those that are doing wrong, those that have hurt shareholders or investors, and certainly white-collar crime in general, needs to be addressed more seriously. South Africa is going through a period where there's a fair amount of focus on corruption, and I think the spotlight should certainly be on public-listed companies. There is a big price to pay as far as portfolios or shareholders go, where the losses start to mount. I hope that the machine can start in terms of trying to weed out any corruption or any white-collar crime that happens as far as JSE companies go. And certainly there are a number of rules as laws put in place to prevent these sort of misdealings. The JSE does take it quite seriously. So I hope that we will have some conclusion to the alleged white-collar crime that's happened by these public-listed companies.
Yeah, it looks like the matter only is left at mess up and go and nothing will happen to you. But then looking at the markets, I mean, when you look at the Asian markets, they had a head start in as far as lockdown regulations being eased on that part of the world. Anything impressive coming out of those bosses?
So, Colin, you mentioned an interesting point. As a globe, we've not all had the lockdown happening at the same time. And because much of China was in lockdown before the rest of the world, they returned to business after a few weeks of lockdown and as the COVID crisis started to ease in their country. What this meant is that they were able to manufacture and produce and starting to get their affairs in order. Many people would, of course, bear in mind that China looks to the rest of the world as clients or as trade partners. And as the rest of the world was going into a lockdown, whilst China was getting back to business, there was some sort of a mismatch in terms of operations. And globally, this has happened because it's almost as a checkerboard of lockdown activity and timing. China has had quite a serious scare in the last few days as there's possibly a second wave, and we've seen Beijing start to contract in terms of activity. Another important takeaway has been the consequences of the change in law by the Chinese government with respect to Hong Kong. This has been something that has not been warmly received by the US and the UK, and there have been a number of comments regarding this. Notwithstanding these different challenges, we've seen the markets rise in Asia, and in particular the Hang Seng has started to climb up quite nicely in these last few trading days, despite the change in legislation.
Right, so coming back home on the JSE, I've been looking at the overall performance of the stocks and the rent.
So, Colin, before I speak about the JSE, if I can mention, in the US, you've also seen quite a steady climb over the last few trading days, as well as in Europe. And I think this has much to do with the work done in terms of a vaccine or some sort of medical assistance that may come to us for the COVID-19 scare. There are investors that are pleased with the possibility of some sort of a solution. And so markets are rising quite nicely. In particular, with the US, I'd like to mention Facebook, which had come under a huge amount of pressure because many of their advertisers starting to pull out. It's been a case of some hate speech that was distributed on Facebook, and of course there's so many contributors to Facebook that there's good and bad that comes out of it, and advertisers not being happy about it, particularly in light of the Black Lives Matter campaign. Coming back to South Africa, you've also seen our markets move up quite nicely over the last few trading days. Just to include, a few days ago, we saw the GDP number come out, and this has shown us that the economy has contracted for the third quarter in a row. We saw the last two quarters of 2019 calendar year as a dip in GDP, which put us in a position of a recession. And of course, for the first quarter of 2020, the market contracted. Of course, this was before the full impact of the lockdown. It's really the second quarter of 2020 when we were in lockdown. So you can expect GDP for the second quarter to also go down.
Right. Thank you very much. Unfortunately, we have run out of time for this web, but we really got the gist of the matter. But thank you so much. Your time really appreciated. We're speaking live here to Lavan Gopaul, who is director at Merchant Africa, giving us a market rep for the week that was. Consumer